What's going on, everyone? Today we're diving into the wonderful world of credit card debt. You know, that magical thing that makes you feel rich for a moment and then poor for a lifetime. So, grab your maxed out credit cards and let's talk about just how deep in the hole the average middle class American is. Spoiler alert, it's deeper than Biden's comprehension of basic economics. All right, so let's start with some shocking numbers. According to the Federal Reserve, total U.S. consumer debt has skyrocketed to a staggering $17.5 trillion in the fourth quarter of 2023. To put that into perspective, that's like buying every American a ticket to space with Elon Musk. And a good chunk of this debt is what we call assets, like mortgages at $12.25 trillion and car loans at $1.5 trillion. You know, the stuff that at least gives you something to show for your debt. But let's get to the juicy part, credit card debt. This bad boy of debt increased by $50 billion to a whopping $1.13 trillion. That's right, folks. We've collectively decided that being in debt is the new American dream. Forget white picket fences. We want sky-high interest rates and minimum payments that drag on longer than Joe Biden's speeches. According to Experian, the surge in credit card debt is due to more people carrying balances and, of course, our beloved retail therapy. Because nothing says I need this like buying another useless gadget to distract us from our financial woes. It's like therapy, but instead of a therapist's couch, you get a mountain of bills. And let's be real, the only thing retail therapy cures is the fear of having too much money. Now, let's break it down by generation. Gen X, congratulations. You win the award for the highest average total debt balance at $157,556. Millennials are trailing behind with $125,047 and baby boomers at $94,880. You guys are like debt overachievers. And here's the kicker. The average American owes $6,501 in credit card debt. But Gen Xers are the overachievers here with an average of $9,123. Millennials and baby boomers are pretty average with around $6,500. Meanwhile, Gen Z and the silent generation are the frugal ones with about $3,300. I guess they're too busy making TikToks and reminiscing about the good old days to rack up as much debt. Now, here's where it gets interesting. With all this debt, people are looking for safe havens for their money. Enter precious metals, especially gold. When the economy is playing Jenga with our finances, gold stands strong. Historically, when debt rises and currencies falter, gold prices tend to go up. It's like the ultimate financial middle finger to the chaos. So while you're drowning in credit card debt, why not diversify a bit? Gold doesn't rack up interest, doesn't have a minimum payment, and doesn't come with a credit limit. Plus, look, it looks way cooler than a stack of credit card bills. And speaking of things that don't hold value, let's talk about Joe Biden, the man who puts the old in old age. If his administration were a credit card, it'd have the highest interest rate and the worst rewards program. Maybe if we paid off our debt with Biden bucks, we'd all be millionaires by now. But hey, at least we'd have plenty of laughs along the way. Just like when Biden tries to remember what day it is. All right, let's dive deeper into why credit card debt is such a beast. For one, the interest rates are astronomical. We're talking about rates that make the national debt look like a clearance sale. Credit card companies know how to reel you in with low introductory rates and then, bam! You're hit with rates that would make a loan shark blush. These high interest rates mean that if you're only making the minimum payments, you're in it for the long haul. Like, till death do you part kind of long haul. And let's not forget those lovely fees. Late payment fees, over the limit fees, and my personal favorite, the we're charging you because we can fees. It's like being in a toxic relationship that you can't break up with. So, how do you get out of this mess? Well, there are a couple strategies. The first is the snowball method, where you pay off your smallest debts first and then move on to the bigger ones. It's great for motivation because you see progress quickly. Now, the second is the avalanche method, where you kind of tackle the debts with the highest interest rates first. This one saves you the most money in the long run. But let's be real. Both methods require you to actually stop using your credit cards, which is kind of like asking Joe Biden to stop making gaffes. It's not going to happen overnight. Now, while you're busy digging yourself out of debt, consider investing in something that's going to hold its value, like gold. Unlike paper money, which seems to lose value faster than Biden's approval ratings, gold has been a stable store of value for centuries. In times of economic uncertainty, like now, gold often soars. So, if you're tired of watching your debt grow, maybe it's time to watch your investments grow instead. And let's be honest, having a gold bar is way cooler than a wallet full of maxed out credit cards. Plus, look, you can't exactly flash your credit card debt at a party and impress people, but a gold bar? Now that's a conversation starter. So what's the takeaway here? Credit card debt is a trap that can keep you stuck for years, if not decades. But there are ways out. It takes discipline, planning, and maybe a bit of humor to get through it. And while you're at it, consider diversifying your assets. Gold and other precious metals have a long history of weathering financial storms, unlike our current administration, which can barely weather a press conference. Speaking of which, if Joe Biden were an investment, he'd probably be a Ponzi scheme. Promises of great returns, but in the end, you're just left with a bunch of IOUs and a headache. Maybe if we all invested in gold instead of waiting for Joe to fix things, we'd be a lot better off. All right, everyone, that's it for today. Remember, while your credit card debt might be climbing faster than inflation, there's always gold to lean on. And if that doesn't work, at least you can laugh at the absurdity of it all. Stay financially savvy, or at least sarcastically broke. See you next time.